Welcome to another episode of the Michael Yardney podcast, where we help investors gain clarity amongst the confusion of the many mixed messages regarding the property markets to help them develop the financial freedom they're looking for. Now, today we're going to be tackling one of the country's most pressing issues, the housing crisis. So whether you're a property investor, a homeowner, or somebody trying to break into the market, you've no doubt felt the impact of skyrocketing property prices, rental stress, and the shortage of affordable housing. So to help us navigate this complex issue, today I'm joined by Brendan Coates, the Housing and Economic Security Program Director at the Grattan Institute. Brendan's one of Australia's leading voices on economic policy. He's been at the forefront of the conversation around housing affordability, rental reforms, and the policies needed to address a housing supply shortage. So I'd like to explore with him what's really driving the housing crisis, the impact of migration and tax policies, and why simply building more homes may not be the silver bullet many think it is. And we'll also get some insights from Brendan, I hope, to find out a bit more about how maybe we could create a fairer, more sustainable housing market for all Australians.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
So after that long introduction, hi Brendan, welcome.
Thanks, Michael. Good to be with you.
Now, Brendan, I know about you and your reputation well, but not everybody does. So who is Brendan Coates and who is the Grattan Institute?
Thanks, Michael. So I'll start with who the Grattan Institute is. So Grattan Institute is an independent public policy think tank. It was created about 15 years ago intended to help solve some of Australia's most pressing public policy problems. The Institute is explicitly non-partisan, so we are in the game to basically get policy change in the interests of Australians. The way it's funded is essentially an endowment that came from the federal government and the Victorian state government, and basically Grattan more or less lives off the earnings. So it makes us quite independent, so our funding is not linked to ongoing government funding or other sources. So it gives us independence in that sense. And my role there is I run what is now the Housing and Economic Security Program. It used to be called the Economic Policy Program. That covers everything from housing, retirement incomes and superannuation, working age welfare. And I've done a lot before on issues like migration in past life and macroeconomics. I came from the World Bank and from the Treasury. So I'm an economist by training, and we've been looking at issues around housing at Grattan for pretty close to a decade now.
So we're now in an interesting position, the beginning of a new year, but over the last year, the housing crisis has been in the news a lot, and I can imagine being an election year, it's not going to go away anytime soon. But how did we get into this situation where we've got a shortage of properties to buy and a shortage of properties to rent, Brendan?
Well, it really has been a perfect storm over a long period of time of rising demand from housing as people get wealthier, as we've had strong population growth, but also rising prices because interest rates have fallen, and that makes it easy to finance new property purchases, which means we end up in a world where prices have risen relative to incomes. But prices wouldn't have risen as far and rents wouldn't have risen as they have if we were building enough new housing to meet the needs of that growing population. So sort of at the heart of the crisis in our sense is probably three things. One, we haven't built enough housing. There's actually relatively little housing per person in Australia compared to a lot of countries, and we're one of the few that's gone backwards on a per adult basis in the last 20 years. Two, we've got falling rates of home ownership. It's falling really fast for younger, poorer Australians. So the share of of home ownership amongst the bottom 40% of Australians of all ages is falling. And then we've got a problem with renting where rents have risen, particularly recently since COVID. But poor Australians have been spending more of their money, of their incomes on housing as a growing trend in the last 20 years, which means they might be paying to keep a roof over their heads, but they're struggling to afford anything else. So there's kind of three different challenges. It's more expensive overall to rent or buy. Falling home ownership is a problem because it has an impact on the ways much of Australian society is structured, particularly our retirement income system. And then low-income renters are, in the game of musical chairs for housing, they're the ones that are missing out the most.
Well, there's clearly more of us too with immigration, but the latest census has shown that there's fewer people living in each household. No, it's not a big difference if you look at the numbers. I think there were 2.5 something people per household a while ago. Now it's 2.48. And while that doesn't sound like a lot, from what I've read, it's actually created the need for maybe 200,000 more houses just to house the same number of people in the population, Brendan.
Yeah, there's no doubt, Michael, that look, migration's playing a role because migrants need homes just like everyone else. A rough rule of thumb is about additional 100,000 extra migrants, particularly above the kind of long-term average, which is what we've seen recently, raises rents and prices by about 1%. And so we've seen a big return of migration since the pandemic. And in fact, since the borders closed, we now have more adults in Australia than what was expected before the pandemic on that long-run trend. But you're right. The biggest driver of sort of rising rents since the pandemic, because rents are up 20, 30% in Brisbane, they're up more. Brisbane, they're north of 50, 40%. In Perth, they're up 80% in nominal terms since the pandemic, is the fact that Australians are demanding more housing. I work from home quite a lot of the time. I now have a home office. We have a larger home. And that increase, that wider change in household size, it went from 2.55 people to 2.48. Sounds tiny, right? But across 10 million dwellings, 11 million dwellings, that's an extra 275,000 homes that we needed. Now, some of that's unwound as people consolidate their housing demand, move back into share houses, move back home. But that hybrid work trend is here to stay, particularly in Melbourne and Sydney. That's half the property market, more or less. So that increased demand, which supply can't possibly keep up with in the short term, is here to stay, it seems.
It's been blamed on immigration, and there's been talks about lowering immigration, capping student numbers. A lot of immigrants, when they first come in, actually don't buy houses, do they? They rent. They got to find out where their jobs are. They got to find out where they want to live, how they want to live. I can see it creating a demand down the track. All these immigrants who've come in over the last couple of years, they're coming with aspirations of wanting to buy a house. That's part of the reason they've come to Australia, apart from a better lifestyle. But I guess that's affecting the rental market in the short term, and over the medium to long term, it'll affect the home buying market.
That's right. So migrants, like everyone else, occupy housing, so they're increasing the physical demand for housing. The net effect of that is going to increase rents in the short term. Now that, the way I think of it, Michael, is you've got these two markets, the rental market and the home ownership market, but they are linked, right? Because if there's increased demand for rental properties, that should lead to increased demand for investors to buy rental properties. That obviously squeezes the home ownership market. So, and if you think that prices for houses do reflect, at least in some sense, the sort of discounted net present value of the rental yield plus some expectation of capital gains. If rents rise, that pushes up prices for everyone. But the challenge with migration is it's not the main game. We could certainly slow migration and it would reduce pressure on housing. The issue for us is that depending on how you do it, most of the ways you would do it would probably make us poorer. Obviously, students, particularly if they're going to our main universities, spend a lot of money on fees. It costs something like $40,000-$50,000 a year for fees at some of those institutions. If they're skilled migrants, our work has shown that they provide this enormous dividend to Australia in the long term. So your typical skilled migrant who gets a permanent visa and stays here in perpetuity, contributes roughly $250,000 more in taxes than they draw in services and costs of infrastructure and everything else over their lifetimes. And so if you want to slow the pace of migration, and we do it through skill migration, which inevitably you kind of have to, it's most of the program, you're probably increasing the taxes that you will have to pay as a citizen in the long run to afford the services that we all expect from government.
Especially with more baby boomers moving out of the workforce and moving into some needing pensions, others needing healthcare services. Somebody's got to pay that. So either those left in Australia are going to have to pay, or we're going to have to bring more people into Australia to help make the tax dollar work more efficiently. So people are blaming immigrants and other things. What do you think is going to get us out of this housing crisis?
Well, the first thing I'd say there, Michael, is I don't think this is probably the worst it's been in terms of affordability to purchase, affordability of renting. That certainly in the time I've looked at the issue. So the problem's really bad.
I've been in the market over 5 decades. I bought my first property in the early 1970s, in my early 20s, Brendan. I have never seen a situation like this. And I don't like the fact that in Australia, the people can't buy affordable housing. Maybe the expectations are wrong. I know I'm going to annoy somebody by saying some young first home buyers are hoping to buy the sort of house that took their parents 30, 40 years to be able to buy. So maybe you've got to lower expectations a bit. But apart from that, it shouldn't be as hard as this. So sorry to interrupt you. I've never seen it like this either.
No, well, you've been in this game longer than I have, Michael. The only thing I'd actually say, because I think it's a good point to pick up on about the expectations of first home buyers, because we've gone through this. I'm 39, so I've got a young family. We had to upgrade our home because it grew, and I think a big difference in the ladder that we expected people to jump on in the past was stamp duty, because house prices were smaller compared to incomes. The amount of stamp duty you had to pay at each step on the ladder was so much less, which is now pushing people to buy the forever home first, because otherwise they have to blow a year's salary on the increased stamp duty down the track in order to get the better home. So I think that's one of the things pushing people to demand more housing earlier, is that need for the fact that stamp duty is there as an impost. But where do we go from here? I think it was your original question.
Yes.
I'm actually a bit emboldened by the fact that I've never seen governments talk about the problem like this and actually start to own solutions. This is the first federal government. Certainly I've seen Claire O'Neill is now the federal housing minister, really talking about the crisis that they see they're in, and all the levers are on the table. The states, Chris Minns in New South Wales in particular, but now Jacinta Allen in Victoria, are talking about upzoning large parts of Sydney and Melbourne. To us, the solution, it's not exclusively, but a large part of it is building more. We're not going to solve this problem unless we meet that underlying shortage of housing. We've seen what that looks like across the ditch in Auckland, where we've seen a big upzoning in Auckland. 90% of the land area of Auckland's 75% was upzoned. A big increase in supply in a really short space of time. And rents in Auckland are lower now relative to inflation than what they were in 2016 when they upzoned. The rest of New Zealand's up 20%. So what I think the answer is, allowing more housing to be built where people want to live. That does mean change in existing suburbs, including where I live in. I'm 6 k's from the city in Melbourne. There's a single dwelling overlay on the street I live on. You literally can't subdivide the houses, even though it's within 400 metres of 2 train stations, 2 schools, a shopping strip, and a kilometre and a half from a freeway. It probably does mean some reforms to the tax system, but I think they're a lesser part of the story than I think a lot of public commentary makes out. So negative gearing, capital gains tax, we think they would be worth reforming, but we do not think that they are going to have a huge impact on prices. But the other part of it, Michael, is probably at the bottom end. We need to support renters more. It probably means a higher rate of rent assistance. It does mean some more social housing to make sure that there's a safety net there. That's kind of fallen away a little bit. But ultimately, we're not going to solve this problem unless we build enough housing to meet the needs of Australia's growing population.
I'm seeing politicians from the state government and the federal government now saying we've got to build more houses. I mean, the federal government, we know, says they're wanting to build 1.2 million new houses in the next 5 years. We also know they're not going to build any of them. They've got to encourage others to do this. The local councils are maybe fighting this a little bit more, but are the politicians really interested in solving the housing affordability crisis, or is this just narrative because it's an election year? I mean, with 70% of Australians owning their home or paying off their home, there's the old story that nobody's ever complained to the politicians about the value of their homes increasing. So one way of making homes more affordable is lowering property values, but I don't think anyone wants to be overseeing a housing market where property values are falling, Brendan.
I don't know if they necessarily want to see a market where property values are crashing, but there is survey evidence that says, and there may be difference between what people say on surveys versus what they feel when it actually affects them, which is to say that people would be happy to see house prices certainly flatline and maybe fall somewhat. And that's what more supply would probably do. I think our view for a long time was that this was one the governments didn't want to solve. I think what's changing is the demographics of the electorate. this federal election, I think, is the first one where there are more Gen Z and millennial make up more of the electorate than the older cohorts. And that's for whom home ownership rates have fallen fastest. So housing policy in Australia has probably typically catered to older generations in terms of the politics, because you don't want to annoy the boomers when they're the bulk of the electorate. That is changing. And I think that's part of the shift that we're now starting to see, that, the fact that Jacinta Allen, went to Brighton and announced we're going to upzone this area for more housing, and was happy to have that debate. I could not have imagined that happening even 5 years ago in Victoria.
No, well, I actually live in Brighton, and I know there was a walk down Church Street with the locals complaining. So that's part of the problem with NIMBYs. I think the other challenge, of course, is, well, just for those who don't understand, the concept was that there's going to be a number of zoning changes in Victoria. Jacinta Allen said that. Chris Minns has done that in New South Wales, where there's going to be more ability to build higher density, high-rise apartments close to railway lines, close to transport hubs. And I can see that in principle that makes sense, Brendan. The challenge I can see is amalgamating sites that are in expensive locations and to make them big enough to be able to build 10, 15, 20-story buildings, and then to actually make them financially viable, because anything that's multi-story, especially if there's a crane involved, especially if there are unions involved, seems to be too expensive currently to make financially viable.
I think that's a good point, Michael. When we're thinking about upzoning, and so Minns has done this in New South Wales around train stations as well, it's often 4 to 5, 6 stories. I suspect, we don't know, but I expect a lot of the additional housing that will be built in, say, whether it's around Brighton or a lot of these activity centres, will probably be more in the 3 to 6 story range. I think there's lots of anxiety around 15-story towers. I think there's a role for those things at places. There's one quite close to where I live, and it actually works really well. But I doubt that most of the additional housing will be that form. It's worth pointing out, just to backtrack slightly, that the reason why governments are going down this path of more density, as in giving people more housing choice, more housing where people want to live, is when we look at prices, that's where prices are highest in those areas like Brighton, which are very attractive places to live. Like, it's a lovely location. They're also doing it because it's much cheaper to service homes in existing areas with infrastructure compared to going further out. So if you're worried about your tax bills, if you want to build more in the greenfield on the urban fringe of Melbourne or Sydney, it is up to 4 times more expensive to service that home with infrastructure on the greenfield site than to make use of spare capacity for water, sewerage, power, all the infrastructure. And what we see in our surveys is there's actually unmet demand. So if you give people real trade-offs, like if you say, where would you like to live? Everyone will say, great, I'll live in Toorak on the 2,000 square metre block with a tennis court and, a butler.
And a swimming pool.
And the swimming pool. Well, that goes without saying, right? That's obviously, that's just part of the package if you're in that area. But if you give people real-world trade-offs and say, well, it's a 2-bedroom apartment or a 3-bedroom townhouse in a middle suburb or a 4-bedroom house on the urban fringe, a lot more people choose that denser form of housing. I think you're right, though, that the key point problem is that it's become more expensive. I think this is perhaps a bit more of a problem in Melbourne, where house prices have not risen as much as what they have in other cities that can probably they can still sell those dwellings wearing the cost of construction. But it probably does point me that the answer partly will be activity centres, but it's probably allowing more townhouses, gentler density in those suburbs, because that's actually the cheaper form of housing to build. And that's what we saw in Auckland. Most of the additional housing was actually 2 to 3 stories. There were some apartment buildings, but a lot of it was that gentler density, because it's cheaper to build that than to build an 8-story apartment.
I agree with you. The missing middle of these townhouses is where I see more young families are going to live on big accommodation. We live in big accommodation in Australia, but on more compact land, and therefore neighbourhood's going to be more important than ever. So if you don't have a big backyard, you want to be near a park, you want to be near sporting facilities for you and your children. You and I live in Melbourne, so we understood the importance of neighbourhood during COVID and the lockdowns, didn't we?
Yeah, it was crucial. And I was very lucky that we moved house partly as a result of COVID to an area that had much better access to green space, that was just within our 5-kilometre zone of where we could go. And just within the 5-kilometre zone, the ellipse of where my mother was living as well. I doubt without COVID, we would not have moved to that location because it became so much more obvious to us that we needed that space. And I'm very now grateful we have it with the young family. But you definitely can create walkable, vibrant neighborhoods with either townhouses or apartments. What we do see is when you've got a nexus of people living in an area, then it creates vibrancy, and you need housing to be cheap if you're going to get, sort of creative culture happening in a city. We've seen that in places like San Francisco, where basically the city has been hollowed out because the only people who can afford to live close to San Francisco Center are tech workers, and no one else can live in that area. If you don't allow diversity of housing choices, then you probably undermine the culture of an area if you don't allow it.
I can understand that. Now, you talked about Auckland. We were recently in Christchurch, where I saw them rebuilding the city after those unfortunate earthquakes 12, 13 years ago. And interestingly, lots of townhouses being built 2 and 3 story. But Brendan, they were 60 squares, 80 squares. They didn't have a front yard. They didn't have a backyard. Some didn't even have any parking. And they were selling for 6, 7, 800,000 New Zealand dollars. We're building much, much bigger accommodation here. In some ways, the biggest accommodation in the world. Everyone like you and I work from home need a Zoom, or work from home part-time, need a Zoom room, need a media room. Millennials are now planning the next stage of their life and wanting a spare bedroom for the children. I see that as one of the issues. We've got the biggest houses in the world and built to a very good standard.
Well, that's what happens when you have rising incomes. So people tend to spend more on housing as they get wealthier. So it kind of goes back to how much more housing we need. You need more housing than just keeping up with population growth, because what happens is we demand bigger dwellings. We also demand, or people like to have a beach house or some other retreat they can go to. And as long as we're making it easy to build, that's fine. There's no reason we should be rationing that. It's in the world where we make it hard to build. And it is, there are things we should be able to do to bring down construction costs as well. It's probably an understudied area is things like what actually drives construction costs in Australia and say in Victoria in particular. I don't think it's as well understood as a lot of other industries. Certainly we don't see the research base out there that we see on other things. And the Productivity Commission is looking at construction sector productivity for a study now. I expect that out of that, we will see a bigger push to not only allow more housing to be built, but to also make housing cheaper to build as well.
That would be good. Now, in other parts of the world, the government provides social and affordable housing. The governments here are talking about developers and investors providing affordable housing, but they're driven maybe by slightly different motives. So currently, there isn't enough social housing, definitely not enough affordable housing. What roles do the government have? What should they be doing differently?
So, Michael, our research would say that for most people, they just need housing to be cheaper. And if you build enough, then it will be cheaper. But there is always going to be a cohort that either needs support to help pay the rent, for which rent assistance, which is a Commonwealth payment that's available to those that receive income support, like the age pension or job seeker or youth allowance if you're studying, can get access to. We need to make sure that's adequate, because at the moment it's not adequate for most people. And then there's a cohort who really need social housing, which is a combination of a big rental subsidy, because the rents are typically capped at 25, 30% of their income, and their incomes are quite low. Then it's access to sort of better tenure security. It's harder to kick you out, and often access to a wraparound set of services that help you with other challenges you may have in your life. The issue in Australia when it comes to social housing, Michael, is that we only have about 4% of the stock is social housing, and it's fallen gradually over time. And what that means is that people tend to stay in social housing for quite a long time, which means there's no new stock for people who need it. So if you fall on hard times, you have a life event that means you need that support, it's not available to you. And so we know, it basically reduces that risk of homelessness for a vulnerable cohort by about a third. But social housing is expensive. And what makes it expensive is that, say you build, in your business, you build and or people invest, your listeners build or buy housing and rent it out, then what the return they're getting is the capital gain plus the rental income. If you're thinking about how is that different to social housing, well, in social housing, the rent is set so much below the market rent, and the typical subsidy, the gap between market rents and what the person pays at 30% of their income on rent, is about $15,000 to $20,000 per year. No developer's ever going to wear that, and I don't think anyone should. So what really that means is the government's got to pay the subsidy. They're doing that with the Housing Australia Future Fund, which is building 20,000 social and 10,000 affordable, which is a more lightly discounted rent homes over 5 years. Any way that we're going to see governments or more social housing built, how much you actually want is frankly a values proposition. What degree of redistribution do you want in your community? But at a minimum, we would say you need enough to make sure that people who find themselves in really hard times can access it. But it's costly. For every 100,000 extra social housing dwellings, you probably need an ongoing subsidy per year of $2 billion a year. Now, to put that in perspective, there are 430 social housing dwellings in Australia today. So if you want to increase that by 20%, it's going to cost you $2 billion a year. So it's just not cheap. And there's no way around the fact that there's a subsidy. And therefore, it ultimately is going to be government that pays, even if we then pay that payment to community housing providers that are not-for-profits that provide social housing or others.
Now, let's talk about the elephant in the room, the role of tax policies. Again, I'm sure this is going to come up as this is going to be an election year, negative gearing, capital gains tax concession. What role do they play in housing affordability, according to Grattan Institute's research?
Michael, frankly, not very much of one.
That's not what some politicians, and we're not going to get political, but it's not what some politicians or some certain parties would like you to believe.
Yeah, well, also, by the way, we're very happy to get political. We're just not partisan. So we will always talk about the ideas. And if a party has an idea that's bad, we'll say it's bad. We just will never go to the question of, therefore, that party is bad, right? That's the difference in how we operate. Because policy change is political. There's no way from escaping from that fact. So when we're looking at, say, negative gearing, which, is the right to offset net rental losses, so the costs are in excess of the rent that you receive as income from interest rates, from maintenance, from other depreciation, other things, against your wage and salary income. That is how we think of what negative gearing is. That has a modest, that we see that set of arrangements is probably too generous. Is full deductibility of those net rental losses against your wage and salary income is not common across other countries. Partial deductibility is, which is the ability to offset it against future capital gains on that property or against other investment income. Most countries don't allow you to offset it against wage and salary, which we do. But the bigger policy is the capital gains tax discount. It's 50% discount. We think that is, on our assessment of history and evidence, too generous. We've recommended it should be 25%. But just to put it in perspective, those two policies, let's say if Grattan was listened to by the elected government of the day and they'd legislated, we expect that would save the federal budget, boost the federal budget balance by about $7 billion a year once fully implemented. By comparison, we have an $11 trillion housing market. So even a 10% fall in house prices implies you've destroyed $1 trillion worth of wealth. We cannot see how a policy that saves $7 billion a year is going to have a big impact on aggregate house prices. Our estimate is it's probably about 1% to 2%. Because it's, the theory is that the value of the concession gets built into the asset value. Only about 40% of the capital gains discount is for property. Therefore, the impact on prices is 1% to 2%. I think what has happened in Australia, Michael, is that there was a generation of policymakers, of commentators that saw that we changed the capital gains tax discount. Lots of their friends or they themselves bought properties, which is undoubtedly true. But the impact on prices from that change was actually quite small. You only have to outbid the first-time buyer by 10 grand to get the property. And so what we see now is a world where if we unwind that change, we would see a very modest change in prices, but actually a bigger change in rates of home ownership. Fewer investors would win out at auctions because without that concession, or whatever you want to call it, that benefit, they wouldn't be willing to pay as much, and more first-home buyers would win. And New South Wales Treasury economists have done work that says that change would increase the rate of home ownership in Australia if you reform negative gearing and CGT like we propose, or something like it. Home ownership rates would go from 67% back up to 70%. It would reverse quite a lot of the decline in recent years.
What about the capital gains tax concession on homeowners then? In my mind, that's the biggest tax benefit. I was going to use the word rought's the wrong word, but you can own a multi-million-dollar home and it has gone up in value and you don't pay any capital gains tax at all. I'm not suggesting you introduce it. I'm just saying, don't just pick on investors.
Yeah, and I think just to be clear, Michael, when we say policies should change, we're not saying that people who are using that policy at the moment have done anything wrong. It's just that's the rules that you use.
Yeah.
We talk about them as concessions because they're concessions relative to a benchmark where we tax everything in a neutral way. It is certainly true that the biggest concession available for housing is the exemption of owner occupiers from either having to pay tax on the capital gains or in some countries, as some countries do, tax on what's called the imputed rent, the income they receive from their house for not having to pay rent. So if we have not pushed the prospect of we should tax capital gains for owner occupiers, even though I can see a sound case for doing so conceptually, because if you introduce the tax on capital gains for owner occupiers, one, it would be a very hard sell politically, but two, you'd probably also have to allow deductibility of mortgage repayments because that would be neutral. If we're going to tax the gains, we should be allowed to offset the costs. And you can really only do that if you're also going to tax this imputed rent, which some of your listeners are probably going, what on earth is an imputed rent? It's, the value you get from not having to pay rent because you live in your own house. It's the value it gives you. But a politician explaining that would be incredibly difficult. And so we've just put that in the too hard basket. That if we just tax the capital gains and allow deductibility, it's not clear the budget's better off. You may be giving a bigger concession.
So we spoke about stamp duty a little bit. Does the Grattan Institute have a position on maybe reducing stamp duty or getting rid of it and instead replacing it with a land tax of some sort?
Michael, this is one where there is basically a unity ticket across every sort of think tank from the left to the right of politics that stamp duty is a bad tax and replacing it with a land tax would be a good thing. It's a bad tax because it makes it harder for people to move house when their needs change. When you have children, you want to change jobs to live somewhere else. It's also a tax on divorce because if you separate and then you have to sell the house and you want to buy again, people often can't. And so we know that half of women who sell in the divorce don't buy again within a decade.
I never thought of that, but of course, it's a divorce tax as well. That's terrible when you've got all those other costs too. Yes.
The challenge, of course,
I think is disincentivizing right sizes or downsizes, and people are staying in. One of the reasons people are staying in their big homes with all those empty bedrooms because to move to the right accommodation, which is often hard to find the right location, but one of the factors is, I've got to pay all this stamp duty. So maybe there should be the introduction of, just like a first homeowner's stamp duty concession, a final homeowner's stamp duty concession.
Yeah, that is clearly a problem that people are unable to downsize and that we end up with a worse use of the housing stock. The best way to solve this would be to get rid of stamp duty for everyone. And the challenge is that it involves putting a land tax on everyone. And so if you bought your house 3 or 4 decades ago, you contributed a whack of stamp duty then, but you've not had to, through the property tax base, contribute more to the cost of running hospitals and schools and everything else. So there's also a fairness argument that if you're basically putting a lot of the impost of paying for those things on first home buyers or people who are investors purchasing a property. But the transition is the tricky part because how do you get rid of stamp duty, replace it with a land tax? People who recently paid stamp duty don't feel aggrieved that they're paying again. It involves the government giving up some revenue. And the only way we see that it works is if the federal government comes in and says, we'll pay for a share, maybe up to 30% of whatever the revenue is that's lost, and says we'll pay for a bunch of that in order for this tax change to take place because the federal government actually collects most of the additional revenue from a better, higher functioning economy in the aftermath of the reform.
So just to round it all off, we started off talking about a housing crisis, a lack of available properties for people who want to buy at the right price and also for rent. Lots of ideas. How long is this going to last, Brendan? Is there an end in sight?
I think it's going to be a long, hard slog to improve affordability in Australia. On the supply side, let's say if we do the kind of reforms that Auckland has done, we allow more housing, hopefully we make it cheaper to build, then we only add 2% at best to the housing stock every year, and prices are set in the balance of demand and supply of the stock. So we only gradually improve affordability. It's going to take a decade to really solve this problem if we pull out all the stops.
If everything goes well.
And that's right. The alternative is that we keep marching on in the way we are. Housing becomes less affordable. Home ownership is further out of reach. That's a really, I think, big political risk for our community, our sense of social fabric. This is tearing at the heart of it at the moment. And if you don't solve it, we end up with a bigger gap between the housing haves and have-nots. And I don't think that's going to be in anyone's interests in the long run.
Well, we live in the best country in the world, and some would argue, I would, that it's the best time in history, despite all the challenges that are going on. So, like you, I don't like seeing the social divide of the haves and have-nots. I don't also like seeing the rhetoric that's been there, picking on property investors who, in my mind, are providing an essential service that the government isn't. No short-term answers to this, something that'll be in the news moving forward. So, look forward to having a chat with you again in the future to see how all this progresses. Thanks for your time, Brendan.
Thanks, Michael. That was a pleasure.
I guess you got from my conversation with Brendan Coates that there's a pressure cooker building up for the housing markets over the next couple of years. If they call what we currently have a housing crisis, what are they going to call it in 5 or 10 years' time? Remember, Brendan thought, and I fully agree, there's no easy, quick solution for this. And he suggested that even if everything is done right, it's going to be at least a decade before we build enough accommodation, have enough supply for the people that require it for renters and for owner-occupiers. I mean, the population growth is going to continue on. Supply is going to remain bottlenecked with high construction costs. And currently, developers are not really confident in taking on new developments. They can't see the merit in taking on the risk of new construction and development. In my mind, this means that established properties are going to have to increase in value substantially to make new developments, which are going to happen eventually, but the established properties are going to have to increase in price sufficiently to make it worthwhile for new developments to come out of the ground. What this means is that in many parts of Australia, there is significant intrinsic value in properties at the moment. But you can't just buy any property and hope this next phase of the property cycle in this new year in 2025 is going to give you the double-digit growth that we experienced in some parts of Australia over the last year or two. On the other hand, if you want to take advantage of this, and I'm not suggesting you take advantage of people or tenants, but take advantage of strong capital growth to build your own financial independence, you've got to do things right. You've got to plan to become the property investor you plan to become. And that's what we help you with at Metropole. We're much more than just another buyer's agent. We help our clients safely grow, protect and pass on their wealth through strategic property and wealth advice. And we have a wide range of services, not just buyer's agency, but property strategy. We help with financial planning and wealth advisory, business development, even with Mark Creedon, property management, construction, and we will help you implement the strategic plan that we build for you with very powerful software. So if you want to now make 2025 the best year for you in property investment, whether you're a beginner or wanting to grow your portfolio further, go to metropole.com.au, have a complimentary wealth discovery chat with one of our wealth strategists, so we can help you build a strategic plan for your future.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
In my mindset message today, I'd like to help you decide to be happy. How can you decide to be happy? Well, I recently came across a story that I'd like to share with you. It was about a 92-year-old petite, well-poised, proud lady who was fully dressed every morning at 8 a.m. She had her hair fashionably prepared. She had her makeup put on. And even though she was legally blind, she was moving into a nursing home on this particular day. And after many hours of patiently waiting in the lobby, this story says that in this nursing home, of course, she smiled sweetly when told her room was ready. And as she maneuvered her walker to the elevator, she was given a description of her tiny room, including everything that was going on there. And she said, "I love it," to the enthusiastic person who was just telling her about the room. She had the enthusiasm of an 8-year-old who was just given a puppy. "Mrs. Jones," the carer said, "you haven't seen the room." And the lady replied, "That doesn't have anything to do with it." Happiness is something you decide ahead of time. Now that's interesting. That final line bears repeating. Happiness is something you decide ahead of time. Every single morning you have a decision. You can get up, you can decide how you perceive the world. You can decide to focus on things outside of your control, and that'll drive you crazy, or you can decide to focus on the things within your control, and let the rest fall into place. No matter what opportunities, what challenges, what chaos arises, each day is a fresh start, a fresh decision to make. So, my mentorship message to you today is to think how you can decide to be happy today. And each morning when you get up, be grateful. Think of 2 or 3 things that happened just the day before that you're grateful about, to decide to start the day on the right note. It's up to you. You can find happiness each day, as far as I'm concerned. Thank you for spending the last little while with me. I hope you got some benefit from this show. But before you move on to the next podcast you're going to listen to, let me remind you I have another show that I produce once a week with leading demographer Simon Kirstenmacher. We call that Demographics Decoded, where Simon and I unveil the trends that are going to shape your future. In my mind, this is a must-listen to podcast for anyone interested in property investment, but also for business people and entrepreneurs. So if you don't currently subscribe to Demographics Decoded, just please stop for a second and subscribe on your podcast app where you're listening to this, or on YouTube. And of course, if you don't subscribe to this show, the Michael Yardney Podcast, why not click the link that says follow or subscribe wherever you're listening right now. So twice a week, you're going to get benefit from my guests and me. Oh, and I'd like to ask you a little favour, please. If you did enjoy today's show and you know somebody who would also benefit, please tell them about the Michael Yardney Podcast and Demographics Decoded. There's a share button on every podcast app. On Apple Podcast, there are 3 little buttons at the top of the player. Or just tell them about it. Just have a chat with them. Now, I hope you're going to be doing them a favour, and you're definitely going to be doing me a favour in my quest to help as many people as possible to become financially literate. And by the way, I've got a special bonus for you. As my way of saying thank you for subscribing, just go to podcastbonus.com.au. There'll be a link in the show notes, podcastbonus.com.au, where I've got a bunch of ebooks and reports. It's just my way of saying thank you for taking the time to listen. And remember, the information that we give you in this podcast is general information, not specific information about your personal circumstances, because we don't know about them. But if you do want specific information, you can always have a chat with my team at Metropole. Go to metropole.com.au. If you really want to learn more, you can always listen to the previous podcast, the many episodes we've already published. Just go back to the old episodes, which each have lessons about property investment, success, and money. Once again, thanks for listening to today's show.
Thanks for listening to this episode of the Michael Yardney Podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney Podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael, but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?